Are you a real estate agent that's concerned about what the new tax law is going to do to your 2018 tax return this year? Hi, I'm Jim Flouse with RealEstateTaxCoach.com. I want to share some simple information with you that should put your mind at ease. Because quite frankly, this is late February. It's a rainy Sunday afternoon where I live. It's typically the time of year when people are pulling together tax records to get their return done. And I know a lot of real estate agents who are really delaying getting started. They're delaying because they don't know what's going to happen. They've read a lot of articles in the financial press or the local newspaper about how the tax law, tax reform has reduced people's refunds, or read some pretty crazy posts on Twitter or Facebook about what the new tax law is doing to the average small business owner. And the reality is you really should not have to worry. Here's two things that the new tax law is doing for you. You can take advantage of them and you don't have to do a thing to benefit. And that together they will save you over $4,000 on this year's taxes. Here's why. First of all, the new tax law reduced your income tax rate generally by about 3%. If last year you were in the 25% tax bracket marginal, then this year you're in the 22%. If you paid 15% last year, you're in the 12% bracket this year. Now that 3% difference may not sound like much, but let me give you some real dollars in a minute. The second thing that the new tax law has done is it's created a qualified business income deduction. Now you as a real estate agent can save 20% on your taxes because of this new deduction that everyone can enjoy. So let's just give you an example. Let's say you're a real estate agent. You've been in the business for 5 or 10 years. You get a 1099 from your broker, and let's just use a round number of $100,000. And let's say in expenses you have $20,000 of expenses, including auto and advertising, fees to your broker, dues and subscriptions to your Realtors Association, and so on and so forth. So the $100,000 gross less your $20,000 of expenses gives you an $80,000 net income. Now, first of all, that 20% qualified business income deduction is going to take 20% of that $80,000 right off the table. So Uncle Sam does no longer have access to that money. It's no longer taxable. $16,000 can make a difference of over $2,000 in tax saved. Second of all, look at the 3% difference in the tax rate. So if you made $100,000, you had $80,000 as your net, and then you are single, let's just say for example, and you have a $12,000 standard deduction, which by the way doubled this year, so it's a bigger deduction. That leaves you with $68,000 of taxable income. The tax rate is 3% lower, so 3% of $68,000 is roughly another $2,000. So the exact numbers are this. Last year, if you made $80,000, your tax was $13,139. This year in 2018, the same tax will be $10,900. So that's a savings of $2,239. Plus the 20% qualified business income deductions, another $2,180. So that's a total savings of $4,319. Of course, your mileage may vary. Maybe you're a married taxpayer. Maybe you make more money. Well, if you're a married taxpayer, you actually will have more savings. And if you make more money, you will have more savings. So don't be so worried about what the tax law will do to you. I just simply recommend go ahead and get your papers together and get them to a tax professional so that we can get started on your tax return. Too many agents get afraid. They're great with people. They hate taxes, so they delay getting all their paperwork together to take down to their CPA or tax professional. Then they get an extension, or then maybe they don't file because they're afraid they can't pay the tax. Please don't allow this to be you. Get your return filed on time. In fact, I would just challenge you. It's February. Why don't you set a goal for yourself that over the next 30 days, you're not only going to get all your paperwork together, you're going to get it to your tax professional, or if you do it yourself, you're going to get TurboTax open, and you're going to get your return filed by mid-March so that you're at least a month ahead of the deadline. You can get that behind you, and then when the market starts to break open and buyers are calling and sellers are listing, you'll be fully engaged, able to help them make more money, help them sell more for their homes, get more commissions in your pocket, and not having that drag on your psychic mentality of, oh my gosh, I haven't taken care of my taxes, I still got to file my return, I wonder what's going to happen. All of that negative energy is something you'll be free of. You'll be free to serve your clients, and you'll have a much more successful 2019. Hope this has been helpful to you. I'm Jim Flouse, RealEstateTaxCoach.com.